everybody to the Retreat Behavioral Health Wellness Toolkit. I am here today with Steve Leonard, a Retreat alumni, as well as a professional in the field of credit and credit repair. I'm so grateful to have this conversation because I think taking care of our financial wellness is a part of wellness. And so I'm grateful to have this conversation and this opportunity to explore this topic. So Steve, can you take a few minutes and tell us about what you do, where you come from, why you're here, and go for it.
Absolutely. Thanks for having me, Joy. First off, I want to say thank you. So as you said, I'm an alumni. I came into the retreat in 2018, stayed for the 28 days and, got out with all the tools that the retreat provided me, which saved my life. First and foremost, without that, I wouldn't be where I am right now. Second is I'm in credit restoration, credit repair, as you mentioned. One of the things that I found when I was doing, when I was in my recovery was, I wasn't drinking or doing drugs, and decided that, I was going to try to do adult things and get things like cars and credit. And, making an amends to people was one thing. But when I went, I didn't realize the financial disaster that my recovery, in my active addiction caused me. So, at 40 something years old, trying to apply for a credit card and getting denied, or paying 25% on a car note at 40 years old because my credit was horrible. I said something has to be done here. So I started doing it on my own, and I started learning and building, and I found that it really did help increase and elevate my recovery by doing this. So as I started doing it, I decided that I had a gift for it, in a sense, if you want to say that, and decided to offer it out to other people. And you and I had talked, and I thought that this would be something to talk about for people that are coming out of recovery, right? Because we discuss a lot about, making amends to people and making, to institutions and things like that. We try to straighten out our lives. But one thing that I didn't prepare for was the damage my finances did, and that's where this had helped me with my financial amends, so to say. So it elevated my recovery.
Absolutely.
And that's kind of where I'm at today, right now.
And I just want to take a moment for you to mention the company that you work for, just to give you a little shout out. That's okay, because I want to give you, you've taken the time to be here. You've taken the time to create a company that helps people. Can you give me the name of the company?
Absolutely. The name of the company I started was Clover Credit Restoration. And the reason why the name came was it's my wife and my two children and myself. And my wife always mentioned to us in hashtags when photos of us as, hashtag 4-leaf clover, right? So the clover itself just is a constant reminder of, there's family and what I've been through and why I started this.
Oh, wow. That's really actually cool. And you're lucky. And, the 4-leaf clover is lucky. So you're lucky. I agree. I want to take a second just to share a little, and most of you guys who know me know I'm in long-term recovery myself, and just share a very brief story of why this is a specific topic important to me, because I actually, in my early recovery, did a lot of damage to my credit because I was young and early recovery, and credit card companies sent me these applications and they said, oh, you can have this amount of money and, buy whatever you want. And, so in early recovery, I found myself in over $20,000 worth of debt. I needed to do, and to me, that inventory process and that amends process. So I actually went to my advisor, my sponsor, and said, here's the situation. I need help. And I enrolled in a credit debt management program that was reputable. There's some that, you need to really do due diligence with some of this, but they really helped me get my credit back to, my most recent report. And actually by enrolling in the debt management company, I didn't actually impact my credit because they helped me manage it in a way that wouldn't directly impact it. But I had to learn how to manage my spending. And all of that process was put in a sense of taking a money inventory, identifying the issues, making amends in a way through paying the credit card companies back. All of that meant to me being empowered and taking ownership in my recovery. And I can tell you that my December credit score came, or my November credit score came via my bank or whatever this month, and it was 804. And so that to me though it does. Steve's like, yay. I'm like, yay. I'm proud of that. I'm proud of that. I'm responsible, and I can do things today to manage that credit, and to manage that score. So speaking of managing, and managing a credit score, Steve, talk a little bit about what does a credit score mean? What is the value of it? So what is a credit score? Talk a little bit about that.
So a credit score is just a number that is used to see your credit worthiness, right? Because they keep track of, 5 major things, right? You get payment history. That's huge. How well you can repay a loan or the money that they're going to give you. So that's a huge factor. The age of credit, right? How long have you had your credit? How much money you're actually extended on that credit. And there's a credit mix, right? The difference between credit cards and a home loan and a car loan, and they're secured and unsecured. So there's all these factors that go into a credit score. Now, here's the thing, right? When you think credit score, there's all these different things, people, Credit Karma and all these different other avenues that give you that free score. What turns out is they use something called a Vantage score. And those are very different than a FICO score. And FICO scores, there's many levels of FICO scores, right? There's FICO 9, FICO 8, FICO 7. And depending on the industry, they pull from different things. And they have different information depending on who you are. But, again, like you were talking about your recovery and how you built back up, right? I mean, as a recovering alcoholic, I didn't want to pay anything on time. I had a hard time paying because I didn't have the money, and then I just said, forget it, and then a 30-day late becomes a 60-day, becomes a 90, becomes they close my account. Now I'm in collections, and, I don't want to look at that, so I let it go. And then it just gets worse and it snowballs. Right. And then, like you said, you get that extra $1,000 credit card. And I felt like Rockefeller, if you looked at my bank statements for those cards, they were all to like liquor stores and bars and restaurants. And, and I thought I was Rockefeller, but when it came time to pay, I didn't have the money, and that really hurt me, because payment history is 35% of your overall score.
Okay. All right. That's important to know. So that's 35%. What are the other pieces that make up that? I think you said history.
Yeah. History is approximately 15%, right?
Okay.
Of it. The other major one is the amount owed, right? So what they like to do is, if you have 5 credit cards that are each $1,000 a piece, that's $5,000 of credit that you have access to, right? Mm-hmm. Now, what they're going to look at is how much do you have spread across those cards? Are you using 50%? Are you using 70%, 90%? Mm-hmm. When that number gets high, the number where you should really be, and it's hard because we're human and we have to live, right? And that's one thing that when I talk to people in this, that are looking for help, is I say, listen, the rule of thumb is 10 to 20%, right, of overall usage. And that's a low number, right? When you get $10,000 to use only $2,000 of it, a month, that's tough. It's like, well, what do I do with the other 8,000, right? And but what I try to explain to people is, if you're going to use 2 or 3,000 or use more than that, make sure, like you and I had the discussion, right? Make sure you can pay it down the next month, right? Or put a chunk in it, right? Because we have to live, right? I can't take that addictive personality and make it an all or nothing, right? Because I'll drive myself insane. So what I try to do is educate people to say, if you're going to put X amount of dollars on it, make sure that you can put X amount of dollars, to pay back the minimum plus some, or else you're just going to get yourself in a hole. And then you're going to get the case of the, we hear it all the time, the F-its, right? I'll keep it clean. We get a case of the F-its. And it's like, well, forget it now.
Right.
And then we just dig deeper and then we just forget it. And then you're a 40-something-year-old guy worried about if he can get a loan for his kids to get braces or glasses because I don't have money to do it. And I wasn't a responsible adult and active, when I was in active addiction. you know.
Absolutely. Absolutely. Well, and speak to, I mean, there are, that was something that I weighed out in my situation, in talking to my sponsor was, do I declare bankruptcy or do I enroll in a debt management program? And that decision weighed heavily. And really that there are consequences to declaring bankruptcy. You're basically, please correct me if I'm wrong, but you're kind of basically starting from zero once you do that because you impact your credit significantly.
Yes, you do. I mean, bankruptcy when I talk to people about it, bankruptcy should be your last ditch effort to do it. Right now, sometimes, like you say, you talked about debt. So what I learned was I did a debt consolidation. And what they do is they basically take all of my debt and they work with the creditors to give me a payment back. Right. But what they didn't tell me was I have to cancel all my cards that are attached to that. So I lost a huge, like I said, I was probably 30 something years old and they canceled cards that I had for 10 years, 15 years that was good for my credit history. Like we talked about, but they never mentioned it to me. So I was just so wanted to get this stuff taken care of that I said, go ahead. And then next thing you know, I see my credit score just plummet and it says you have no credit history. And I'm literally, 40, now I'm 40 and I'm looking and I'm like, I have the same credit history as an 18-year-old kid. An 18-year-old kid probably has better credit history than I do because now I'm starting from zero.
Yeah. Yeah. So some of the weighing all those out and talking to the right person can really be helpful. Absolutely. So Stephen, speaking about building credit and starting from zero, so somebody comes into recovery and they've not really paid attention and they don't have a lot of credit. They have not had a lot of opportunity. How does one build credit?
So what I always tell people when they're building credit is, again, payment history. I said, if you're behind on your bills, start paying them on time. Even if it's the minimum, just start paying them on time. On top of that, if your credit score is that low that you can't qualify, they have the credit cards that you can put money down on, right? Because you're a high risk. It's called a secured card. And basically what they do is you send the company $200, right? To send a check and they give you a credit card that gives you a limit of $200 on it. So that allows you to act as if you have a credit card and you use that to build up payment history and credit history. And then when it gets to a point, you can always apply as your score goes up, you can apply for actual cards that you don't need to secure. And then you can eventually get rid of that card and then build up on non-secured cards. But that's usually the first step.
Okay. So so that person has that secure card and how do they use it to repair it? So obviously they don't take the $200 out and pay $2 every month.
No.
Right. So how do they manage that card? How do they manage that card to make it worth it, if you know what I mean?
So what I tend to tell them, like I just actually had a client of mine who's a young kid. He's 20, I think 26, and he got one of these cards to start. And I said, listen, you have a $200 limit. I said, use it for gas. Go fill up your tank, right? Now, price of gas, I'm from New Jersey. I live in New Jersey. The price of gas is horrible, right? So he can fill up his tank for $40-$50, and that'll take a chunk of it. But what I told him was, that's fine. And then pay it off at the end of the month, right? Instead of using your cash, put the cash aside. And then when it comes in, pay it off, right?
So it's paying off that card on a regular basis.
Yes. And again, I always say rule of thumb is 10 to 20%, but that's if, as you're building, when you're first starting, I say, listen, get the money, put it aside, use the card. As soon as the bill comes in, pay it all off in one shot. And then what happened was with this kid was he actually applied for 2 regular cards after working with him. He applied for non-secured cards and he got accepted to those. And he just told me, actually, it was funny. Yesterday, we had a discussion because we were working on another project trying to help him. And he said, I don't know if I told you, but the Discover card that I just got a letter 3 days ago that said they're extending my credit from, I think he had a $500 limit to $1,800.
Wow.
So now where that helps him is now it shows a creditor that he has access to more credit now. So instead of, having that little $500 nugget and slowly building up, he's now gone because he's paid it properly. They said, you're responsible. We're going to extend you a little more credit. And then through that, his score is going to go up. Then what he can do is apply to another one. and he doesn't have to use them, but eventually he's going to say, hey, listen, this guy has access to $10,000 worth of credit, but he can only use 2,000. Maybe that's all he needs. And so people don't understand the power of credit, right? Credit is our adult report card of how responsible we are in financial life. That's how I kind of.
Well, to your point, if you go to nowadays, if you go to rent a house or you go to rent an apartment, very often they want to see your credit score.
Absolutely.
They not only want to see your income, they want to see your credit score because they want to know that you're responsible and judicious. So, so what are some other ways that we're, continuing that conversation? What are some other ways that people can repair their credit? What are some? So what about loans and that kind of stuff? How do you?
Yeah, so there's a thing called they also do like it's a product that I offer to my clients. It's called a secured loan, and what essentially is that you're paying them money essentially, and they're putting it into a locked account for you, right? So let's say but they report it to the credit bureaus as a loan. So now you have, remember I told you there's a different types of loans that they want to see you have, like, just besides credit cards and all that stuff. So this particular product, as you're paying them, let's say $100 a month, they're putting this money into an account for you until you reach the reserve that you signed up for, right? Let's just say it's $1,000. So you'll pay the $100, and of course, they have their APR, so they make a little bit of money off of it, right? Everybody. But again, what happens is, and why I like this product is that they continue to pay it, and then when they get to that mark, those funds then get returned back to them. But the whole time, it's reporting to the credit bureau as a loan, and that they're paying it successfully.
Okay. All right. Yes, because they're demonstrating the ability to pay that back.
Yes.
That they're making the commitment to pay that company $1,000, 100 at a time, and they're doing that. And through that commitment, they demonstrate that they're credit worthy.
Yeah.
That's wonderful. And so, what I think, going back to why are we having this discussion? Why is it important to manage your credit and your finances in recovery? Why is that an important why is that important?
So for me, again, there's so much more to recovery, right? Recovery is I feel like I'm evolving every day, being through this pandemic, coming up and speaking at the retreat, all these things, these are gifts, but there's more to it, right? We have to live life on life's terms, right? And there's things that responsible adults do. And one of the things is your credit worthiness. Unfortunately, that's the only thing that companies can look at and say, okay, is this guy good or is he not? Is he worth it? So you were saying before, it was more like a financial amends to me, right? It was like taking that inventory, taking that credit report and looking at it and going, oh God, my payment history is horrible. I had to close out all these accounts. And it's just to me, it was the same emotion of writing my fourth step, and putting down who wronged me, right? Yeah. Oh, this person did this. But then when you get to the end, you're like, oh, that's my part in it, and that's what I had to do. And again, I can tell you right now, I still struggle with it too, right? I do this for a living. I help other people, but I still struggle because there's certain things in my life I want to control. And there's certain things I just got to realize that I don't have control of, and my finances, I can control to a certain point, and I always tell people you can't get blood from a stone. Right. So that's why I have to have those hard discussions with my wife to say, when she wants to go buy something and do something. And again, I get that guilt because she's been in my addiction we've been almost together 20 years. So I did a lot of damage to her, and she's used to me acting a certain way and being absurd with money. Like, oh yeah, I'm upset. Here, take some money and go. And now that I'm responsible, I have to sit there and have those discussions. We can't afford that this month, and that checks on my pride and my ego, right?
Exactly.
I'm the provider. I should be able to be like, you do what you want, honey, go get this. But that's not the case. And it's really brought me to a humbling experience of going through this as I continue to grow. And I love, the greatest thing is I love being able to help others do this, and some people you can't help. And that's the God's honest truth. That's the other thing this has taught me. Some people can help, some people just want to
Just like,
continue.
yeah, just like all the other aspects of recovery. Some people are ready to go there and be that, and do that. And to your point, that experience in early recovery made me forever aware of how much credit do I have, how much money do I have out now, and how aware I became of how much I spent kind of mindlessly without regarding how that would impact me in a long run. And for instance, I recently looked for a house and I decided to kind of back off because right now, honestly, the market's like crazy. And so, but I am determined that I will not make myself house poor. I will not buy a house that I can't afford and afford comfortably with emergencies, with barriers, because I found I could fall in love with 3 houses in a heartbeat, and the old Joy would probably put herself $300 more per month in mortgage payment debt because I love this house, and I have to have it. And that's kind of what they bet on. And I don't mean to be jaded a little bit, but the goal is for them to make money, not to help me. And so, saying to myself, well, I love this house, but I will not love the pressure of having more than $300 than I budgeted as a mortgage payment. So that skill has given me an opportunity to, live in my means. And I think that represents that balance of recovery, that connection. So what if you were going to tell somebody today watching this and they're getting choked up and they're struggling and they think it's hopeless? What's your message to our members and our alumni and the folks that are going to view this video? What's your message to the people that might have struggled or are struggling right now with their credit?
So I guess, my message is like we talked about before, right? It's the finances. And if you're struggling, there are steps you can take. And again, it's not instant gratification, right? I let it look at this like I looked at my 4th step, right? I didn't do all of this destruction in 20 minutes. Like I told you, I'm in my 40s. I was an active drinker since I was probably 14, 15 years old. I had my first credit card at 17. Was irresponsible with it from 17 till, like I said, till I got actually sober, and I thought my world had ended. Here I am, a 40-something-year-old guy asking mom and dad to borrow a couple dollars, and I'm sober now, right? I did that when I was drinking because I needed money for alcohol. Now I need it because I can't afford, I'm getting a 29% interest rate on a car note, But what I will tell them is, if you really want to take an honest look, there are ways to fix it. And you have to accept that there are certain things that just need to go through the natural progression of time. There's no magic wand with credit restoration and credit repair, and that was one of the reasons why I'm glad you asked me to speak, because there are people out there that will sit there and promise, I'll get this taken care of and all this stuff. And again, if it sounds too good to be true, it's probably something wrong,
Exactly.
But go ahead. I'm sorry, Joe.
No, I just think about there is no easier, softer way. That's not going to, and so, but there is hope. There is Absolutely. Hope, and it takes time and commitment and follow through and all those things. Geez, that we actually have to apply to recovery too, right? Yeah. You got to show up and do the work.
And that's the thing, right? Recovery is not just sitting in a room for an hour. For me, recovery is beyond that hour. It's how am I treating my neighbor? How am I treating my wife, my kids? Not just the sick and suffering alcoholic. But one thing I want to share, Joy, is and this just happened recently, right? I've been working on my credit. I have a car that I bought, and that's what really drove me was I leased it. And when I went to buy it out, they put me on the lowest tier possible because my credit was horrible. So I was paying like almost $400 for this car. I'm like, this is ridiculous. So as my credit score came up, I got to a point where I was in the next tier of credit, and I went and I applied for a new one. And I'm literally saving, probably through the course of the loan, I'm going to save about $3,000 to $4,000 off of my loan. Wow. That's how powerful credit can be. If we can afford it, that's great. But just imagine, You know, instead of paying 10, 11% on money you're borrowing, you could pay 2%, 3%, right?
Absolutely.
And that
Absolutely.
and that's what they get us. Like you're talking about a house, right? You know, if you have a 620 credit score and you go for a house, you may have to pay that money back at 5-6%. But someone like you, Joy, who's in 800s, you may get it for 3%, and you're paying that. And that's a lot of money. People don't realize that. But again, it took me time. It wasn't that instant gratification. You know, it took time. It took work. It like our recovery. You know,
Exactly.
you know.
Exactly. So, and I think that's the message here is that action and time and effort, just like all the other things that we do in recovery, are really the key to your credit wellness.
Yep.
Steve, I want to say thank you so much. I'm so grateful that you took the time to do this.
I'm grateful you had me. Thank you.
And I'm definitely going to ask you again to come speak. You know, you've not heard the last of me. You're probably aware of that.
I love it.
And again, this wellness toolkit series is about all of recovery. Just is not just about the substances, but it's about overall wellness. So I invite you to continue to check in to see what we got new. I invite you to check in and stay connected. And Steve, thank you again.
Hey, thank you, Joyce. Thank you so much for everything. I appreciate it.
Absolutely.